Okay, terrific. So welcome. All right, so let us get started with the day. And we do have admins in here, so if you have some questions to ask, they'll be happy to answer, as well as I will see it too. But remember too, while I'm going through the charts, a lot of times I miss things. So, all right, so as you see for today, March 30th, 2020, what we are going to focus on, a couple of things, as you can see on this slide. So the first one, each day I try to come in and I take a look around the world, the news, and all before I actually start to come down into the charts. And so what we're going to take a look at is our equity markets really that week. So we will take a little examination of that. Another thing too to watch out for this week as we get into Wednesday through the end of the week. Bad data is mainly priced in, but better or worse data is not. So really meaning that we'll see in a few minutes that we are expected overall, just because of the current situation, for the data to be bad, but if anything changes, that will make more distinctive moves in, especially with the dollar. And also for our dollar direction, we were correct on where it went to, and there were some questions on some middle levels in there, so we'll also go into that. That will also tie into how the currencies work too as well. So we will discuss all of that in this session. Okay. All right. So the next part that we're going to look at is, okay. So remember, with all these sessions, this is just our temporary solution to things. But what we want to do is make sure that you understand. So can you see the new screen yet? The one with the session guide? What we want to do is make sure that you understand what you're looking at. And that's why the session guide was created. So where we want to start with right now is we want to take your focus to the left side of the screen. On the left side of the screen, you will see that we have different circles and squares. So as you can see, with our usual supply and demand levels, we'll have the lines with the yellow box around it. Okay. The circle with the yellow in the middle is going to be your overnight level. What is the difference with the overnight level? As you can see on the screen, along with the retested level, which is going to be your lower probability. Overnight, typically, these days we are seeing more volatility overnight. A lot of times when we are, previously we had overnight levels where they're just very low volatility and therefore not as good quality overall in general. So you always need to be careful of that. The other one is the circle with the white in it, which means that the level is not, it's not going to be the first time back. So there are times that we are considering a level, even though it's not the first time into the level. You'll see also too sometimes where a level needs to retest multiple times before it gets the big moves out, just because it has some close supply and demand, needs to get through those supply and demands on the opposing side before prices really take off from there. So that's another one. And then of course our blue area with the circle is going to be a possible new level developing. And we had that example inside of the British pound last week, where we're watching for that level to develop. And if you were able to watch that enough, we have rallied quite a bit since there. So I will also go through those examples too as well. On the right side, we have thoughts for success. So this brings me back to a little bit more of my beginning as a trader, and a lot of things that I actually started doing wrong. And so people, I know that, you know, set and forget trading is something that people don't like to do because they feel nervous, they feel uncertain. And what happens, though, many of you can comment on this, is that you start to, you may pick out an area. By the time it gets there, all of a sudden you're thinking, oh, I think the trend has changed. I don't think I don't think it's good anymore. I don't know. You get scared, or you try to look for confirmation inside of there, and before you know it, either prices have just gone without you, or, you know, there's so many different things. Others of you may be just one of those that says, well, okay, I took this trade, but it's not working in my favor, and but, you know, I think it's going to work in my favor. So instead of taking my stop, let me just, you know, add on to it, move my stop. You know, let me do a couple of things with this. And then when you do that, then all of a sudden, now your small risk has become a huge risk. And then if you're a day trader, and then you're carrying it into the next day because you're praying for it to come back. And now all of a sudden, you don't even know what you're doing anymore because it's all just gone. So you want to eliminate that emotional part, right? So what's very important with all this is to make sure you understand your risk and that you're comfortable with it. So that very early on, you know, was always a problem with me because, you know, I was like, risk? Who cares about risk? You know, let me just go. You know, I don't care about risk until, you know, you're taking a much bigger risk than you thought. Then you're like, wait a second, I do care about risk. So always, I think if you know what your risk is before you go in, all of a sudden you're going to be like, yeah, it's fine. If I take the trade and it doesn't work out, it's great. You know, I already knew that's the possibility of what I might lose, and I can lose it, and then I'm okay with it. Right. So those things you got to remember all play into part of really making that emotion free with your trading. Right. And a lot of it is keep it simple. You can see throughout the years, I mean, the originator of our core strategy of supply and demand is Sam Seiden, and we try to keep it very simple, right? And keeping it simple so that we know where, you know, the importance of getting the foundation correctly is because we want to know, first of all, our entry, our stop, and our target. All those factors are very important when, if you know the core strategy well. It is not a complicated strategy, but to master it, you need to definitely practice it and develop it as time goes on. But you can see throughout the years, it's gone through many directions. It's gone to a much more complicated level where sometimes you have multiple steps to try to figure out one zone and whether you want to take the zone. And it's just become more of a, how should I say it, possibly trend type style type strategy, which really doesn't help people. Pure supply and demand, that's what we want to focus on, and that's what we will stick to. And the next part about it is, don't second guess yourself, right? How many of you have done that where, like I said, you spent the time, you did all the work to try to make this right. Remember, this is not 100%. You know, if you're used to being right 100%, this is not going to be what's right for you. So you have to take the odds, take the probability, and get your risk to rewards correctly. And again, that all comes back to knowing your supply and demand very well in order for you to be able to do all of these things correctly. Okay, so those are your key points for now. And then we will now get into a little bit more of the markets, keeping that all in mind. So going through the week, see if we can make this a little bit. All right, so what you'll see now in your screen is more or less the expectations of what we're looking for throughout the week. So coming in, what we see for this week is, I'm trying to move a little bit for you. What we see is that everything across the board is expected lower, right? Everything that we are looking for coming in Wednesday through Friday, through non-farm payroll, through all that is expected lower. So the market, I believe, is starting to price in that this is what's going to happen. What we're not pricing in so far, though, is what if it's much lower than this right now, right? What if it's much lower, or what if it's better than this, right? Better than this. So those two things, those two factors, and a lot of that's going to play into our dollar, right? As far as, you know, what if I want to put in a little bit of what's going on, and, you know, this morning I am hearing a lot about what people, what's the expected timeline of all this? I mean, nobody can really give you a good guide. I mean, one thing we do see is China's PMI, the non-manufacturing and manufacturing PMI tonight. I am seeing that they are forecasting a positive result. So this is where it's been 3 months since this has surfaced, and so they're getting back to a little bit of normalcy. I have mixed about, you know, if we want to compare to China, compared to Italy, compared to Spain. I think we're all different. You know, if we take a look at somewhere such as Asia, where you know, this whole thing with the mask, you know, that's been coming out a little bit more and more over here. But you know, you can see in Asia, they just are. It's natural for the mask. You know, if it's anything, contagion, protest, whatever, mask is just natural. And mask may not do a whole lot for somebody, but what they will do, though, is if you're a carrier and you don't even know you're a carrier, or if you are just have mild symptoms, you know, it can prevent from spreading it further, right? So that's one thing good about it, which for the most part, you know, we're not used to wearing it here, so it's going to be a little bit different. Somewhere over in Europe, you know, you're going to have different health systems. Over around, we have, you know, great health workers, facilities. We have the Board of Health, we have the FDA, and so there's a lot of things here that's different from other places. So I feel like it's not going to be exactly the same how we all come out of this. But, you know, today's it's just been so much going back and forth about that. But now let's get into a little bit more of the charts. Okay, so you should be seeing my screen. All right, so what we're going to do is we're going to start off by looking at the S&P 500, which is going to be on the .D chart, which is the day session. And you can see that we are exactly in the same range as we've been in, okay? Nothing a whole lot has changed. The gap down below is still sitting, you know, at the 2240 and 2183. The above zone, which we did touch once on this gap, the general area at this 2700 is touched, and then the above area. So right now we are just right in the middle of the two areas. When we take a look at the now going down a little bit smaller, you can see on the 5-minute on either side of this, we have hit 5-minute demand, 5-minute supply. So right now, again, we are very small inside of this overall range too. You can see now that our overnight high oops, our overnight high coming in at 25.6750 is also still within that range, and our overnight low coming in at 24.45 is also inside of that whole larger range. So I guess what I'm trying to point out that is we don't have anything really fresh in between here. So it would be best for us to wait for prices to get out of this range now. If you are in other sessions during the week, you might have been able to grab some of this the first time back. But you can see overall in general, inside of here, we don't have a lot of good quality. What we do have kind of moving a little bit outside though, on the 30-minute, a little bit down below before the gap, you can see this is coming in at an overnight. This is more into that Asia time period. So with that, you would get a yellow circle. But you can see a lot of these demands have been tested on the move down. Tiny little gap here. It just barely touched into it. But you can see really down here, this is right into that Asia time period. That's coming in at 22.67, 22.38. Now up above, of course, we have the 4-hour that's still coming in at 27.77, basically 78 to 28.39. Too, I try to think back to when I started, and a lot of times when I tell people, futures, currencies, commodities, and people just look at me like, okay, but that's too complicated for me. You turn on CNBC and all they tell you about is stocks, right? So everybody just focuses on stocks, and I did the same thing. I started out by day trading stocks. I thought that was the best way to go because that was the only thing I knew. And after time, for options and everything, yeah, that's great for long-term holds. That's also great too for stocks. But in the shorter time period of things, you never know what's being a little bit manipulated. Just in general, something could happen that day that's totally out of your control with it. So over time, switching over to these broader markets, because everything drives each other, right? So the individual stocks that make up the S&P 500, that make up the Dow, that make up the Nasdaq, they in general are going to be moving these indexes. So trading these with the higher volume, with the less individual manipulation, just seemed to be the better way to go. So any of you that's kind of focused on, I understand, but I just want to focus on my stocks. Pay attention. Just start to pay attention to it. You can start with the SPY and the Qs. They are the ETFs that's going to drive the S&P and the Nasdaq, and then the IWM, which is a small cap. So they're going to drive it. So you can start by looking at those, and this way you can get yourself used to just looking at all of these markets in general. Then you'll start to realize, well, okay, I can start to trade them, and that, as well as using them as your guide to when you can buy some longer term, hold of stocks, right? If we see the Nasdaq coming into a higher time frame demand level, or we see the S&P 500 coming into a higher time frame demand level, or even supply level, perhaps you want to buy or you want to sell some of these stocks, right? So they offer you more than just that. Sure, we can. Yeah, that part I want to save a little bit for the dollar. Once we get into there too, we will discuss that too as well. All right. Yeah, I believe last week too. Oh yeah, let me go into NASDAQ and then I'll point out. That's a good way to. So the question's about the location, and the location. So let's go into that as we go into the NASDAQ. So Thursday when I was with you. So if you remember, this was the overall area. But remember too, so there was a couple of things with this one, right? It was off of a 5-minute area down below here. This was where we had two slides we had last week, and the one started with where we were in the higher time frame. So if you saw on the slide last week on the higher time frame, this is where we were. If you can see this is a little bit of a darker chart, but it's okay. That's what was on the slide last week. So we were sitting down into this 240 demand zone last week. We actually came back into it today, last night, and we are still rallying from the same 240 demand zone. The overall whole area here is actually coming off of a weekly. It's coming off of a weekly demand zone that we also had on the slides, and then now it's coming off of 240. From that, you can see what we have done, right, was try to, so what we tried to do was take a 5-minute off of there. Now, whether that's always the correct thing to do, you know, you can see it came very close to stopping out. Did get the first target. We didn't take here in the second target, but we did take it into the third target, mainly because this one went to show some strength, was a pretty good break up above. So looking for the third, and this was just the easy target, right? If you remember, we looked at this area, and I will show you on the 10-minute. We looked at this area and we said, you know, you might come into the day thinking, well, right? And remember too, when you make your charts like this big, okay, and it looks pretty, don't get me wrong. You know, you can see the candles really nicely and all, but what you'll see, I'm going to take off the targets right now so we don't have too many extra lines. All right, this one doesn't want to move, it's okay. So it looks all pretty like this, but what you're going to lose sight of is where we are. So last week we did talk about, scroll back, you know, and say, oh, you're going to come in and think, well, this looks okay, right? Well, we got a nice little, you know, nice little base, you know, strong drop out of the zone. Yeah, you know, why not? Yeah, let's go for that one, right? So I use it as because it doesn't mean that those levels will never work. You know, sometimes they do work, but I use it as a kind of an easy money target type of thing. But in terms of taking a trade, I would not take a trade there, and I showed you specifically why. Because when we take a look at it, right. When we take, so this is the overall area. When we take a look at it, we are not in, right? Yeah, we are not in an ideal place, right? So it's not your first time back. It's not, we are pretty low down on the curve, and you can see it went through it pretty easily. All right. Okay, so I just wanted to bring that up so everybody kind of knows that. So for the Nasdaq now, the Nasdaq has been a little bit stronger than the other markets. You can see that it's still, from the last time it hit the overall gap before, it still has this upper zone up above. But let's go take a look at there's not a whole lot of changes from the SPY and the Qs. But like I said, if you are very new to this and you are trying to, you know, watch some stocks and all, pull up the SPY, pull up the Qs. Their analysis are going to be very, very similar to our gray charts that shows you the .D. They are going to be very, very similar in terms of where you're going to find your supply and demand levels and how we talk about these markets. So just remember that. as we continue on with these markets. So now you can see we're coming off of the 240. Down below, this is actually not a, this was a little bit of a mistake here. This should be overnight. So overnight, again, remember from any of you that's missed the session guide, make sure you go back and watch it. That's going to be important so you understand what the circles and squares and colors mean. So you can see here where this is the level we've been rallying off of. Underneath it, we do have an overnight level, and then above it you can see our 4-hour coming in at 80.85 to 82.41. There is a 5-minute zone inside of here, but again, you're going to see it's going to be right inside of this overall highs here. So not high quality, but I will point it out to you. So you can see, again, like I said, not a high quality location. And they're both going to be overnight. How do you know it's overnight? Well, one, you can go to the .D session and see if they exist there. And the other way is just to look at the time. See, for me, you know, how this all evolved is, you know, I like many people, you know, like I said, I started with stocks. I then moved into futures, and within futures, I started doing the Russell, and then like many of you, which you're trying to look for the markets that move the quickest, I moved into the crude oil and gold, and so all of those are really not markets for beginners. You know, if you're brand new, you just look at those markets like, wow, this is exciting. You know, I can grab a couple of bucks within like seconds. You know, so to you it's very, but then you can lose. You know, and if you're not following rules, you can lose even more. So they're not exactly the ideal markets for beginners. But then from there, then I did move into the Forex market, you know, with the starting with the spot and then also adding on to the futures currencies. And I find that what's interesting that the Forex market kind of made me aware of is, you know what, the world doesn't stop at, you know, 4 o'clock Eastern Standard Time. The other parts of the world is just beginning, right? Just like I showed you with the currency page last week. The world is just beginning around the globe, right? So if you take a look here and you see that this is really Asia coming in, right? Asia. And some of you might say, well, how am I supposed to know that? Well, it just comes from overall, you know, the more you get into it, the more you're just going to know, right? So this is exactly where this is coming from. But we do know that this whole area too, you know, location wise, not the freshest area, because it's going to be right up into this zone that we're looking at there. All right, so again, like I said, the S&P, the ES.D going to be very similar to the SPY here, and so is the NQ.D to the Qs here. And since we didn't have too many changes coming into these markets, I don't think we need to go through them. We'll go take a look at the Russell. The small caps a lot of times has been the leader. In you know, prior to all of this, a lot of times it is the leader that tells you where the market's going to go. Let's go take a look at the Russell. Russell, you know, before it used to be where we could trade TF, now it's RTY and IWM, all together moving in the same as well. So with the Russell, let me just make sure I believe I might have put it on here. Okay. So, yeah. Okay, no problem. So for beginners, I would definitely say, so I do suggest that if you can try to move into futures, you do try to move into futures, just because I think what I've seen from myself and others throughout the years is just technically you start to grab it better. You know, you're dealing with bigger markets, you're dealing with volume, and now all of a sudden your technicals come into play a lot better, and so I believe that once you grasp the original core strategy and you start applying them, you know, I believe futures first, but it can be you can start moving out to any markets after that. You can go back into stocks, you can go back into the spot market. You know, I kind of made a little bit of a trip around and then coming back, and then once I came back out again, it made things you know, just a lot more clearer for me. So you know, you want to start out. So don't put all your eggs in one basket. So you don't have to go, oh, let me trade the S&P, the Nasdaq, the Russell, and the Dow, right? Because if you get one wrong, more than likely you're going to get all of them wrong. So you may want to do. So let's do, say, for instance, you say a lot of people like you know, the Nasdaq, right? So okay, I want to do the Nasdaq. So that's an index. All right, let me see what else I can do. Well, bonds for a lot of times can be an inverse correlation. These days it hasn't been, so just be careful of that. But let's just say that for a good part of things, bonds can be. So you know, they're going to be a higher risk though. So you have to realize that that's going to be okay for you. If there's too high of a risk, you know, of course, be a market that you watch then. But I would suggest putting one of those. You can do the 5-year, 10-year, 30-year. Okay, so you can take one of those. Then you want to add a commodity. Again, they can be also a higher risk to you. There is some minis in them, but you know, again, you have to be okay with it. But add a commodity at least to your watch list. You know, this way you get a broad range. And then of course the Forex market. So whether you want to do spot or you want to do futures, there is micros in both of them, so you could definitely start. And there are also micros now in the indexes, in the futures. So as a beginner, you can start with micros, or you can even remain there, because all you have to do is increase your size. You know, you don't have to, even if you're doing 1 micro at the beginning, you know, you can do, you know, later on 10 micros, 20 micros. You know, you don't have to switch out of there. You can continue on trading there. But then it does give you the option to learn with a little bit less risk. So take on the currency market. Inside of the currency market, you may want to start off simple too as well. For myself, I started with the euro and the yen. You know, those were the main two I focused on. Euro, typically people like to just go to. Right now, what we're taking a look at is we're seeing that what's being a little bit more bullish with the markets, and what's being dragged down. If you take a look at such markets, so we have the indexes moving together, and we have the euro, the Aussie, the euro, the Aussie, the pounds. Those are moving more or less with the stock market at the moment. So if we see some like gains in the stock market, you'll see some gains inside that market too. The only difference will be, you know, a little bit right now, which one's going to be a little stronger, the euro or the pound right now, even though the pound made new lows, but still right at the moment, they're kind of neck and neck with each other. So just remember that if you want to keep one separate from each other, you may take a euro and a yen, which can be opposite, instead of doing, oh, let me do euro, pound, and Aussie, right? Because they're all going to be kind of a little bit the same when it comes to this situation. Okay, but over time, what you'll realize over time is that it's not going to hurt you to look at a couple of more markets. It's not going to hurt you. In the beginning, yes, I would try to stick to a few, and this way don't get yourself too confused. Over time, adding a few markets to your repertoire doesn't hurt things. Okay. All right, so let's take a look at the Russell. All right. So yeah, the dollar we will talk about in a little bit too, that's for sure. So you can see right now with the Russell, let's move, and this is a small cap. Where are we? Okay, so here we are. So you can see up above still quite a bit of ways on the 60-minute. We have this supply level at 1252.50 to 1270.20. On the 5-minute, same thing as the rest of them. Nothing is fresh inside of this overall area. The overnight high and overnight low is still within the range. You can see this whole move from the 26th, where prices shot up and then fell back down. So we're right in the middle of the range too. It does need to, you know, get a direction and move out. And for right now, you know, if I'm looking at this morning, there's not a whole lot of evidence of the inverse markets. The only thing I'm seeing is that there does seem to be a lot of negativity in the morning, and the markets haven't dropped a whole lot. You know, there's a lot of people that seem worried about how long this is going to go and everything, but yet at the same time, nothing's dropped a whole lot, probably because of all the stimulus that's coming. You know, and the other part will be whether the stimulus, how fast they can get it out to everyone. So, you know, that's all. It looks like that's what's being kind of put into the markets at the current moment. Now let's go to the monthly of the IWM. So the IWM is the ETF. And you can see where we've come down to, right? So if we go to the monthly, we can see we went we've come into these two levels on top of each other, came back into this upper one, and now this lower one, which is going to be a retested area down below. So should prices come back down, come a little bit lower, that's going to take us into our next retested monthly area at the 93.25 to 89.25. So it's always good to put that bigger picture alongside with your you know, intraday picture. Even if you are an intraday trader, you know, a lot of times you get a little bit blindsided with things, right? So actually with this one, since it has been hit, you can even take it off because it has been hit. Oops, no, I did too much. All right, and then you can see we barely touched into this lower area. So that's something still to pay attention to should we take another move down towards the lows again. Okay. Yeah. So that's the main thing with today. Because so that was the big point with today. Today, because we're right in the middle of all these ranges, the clues for this morning is not, I would say, perfect. The only thing I would say that's a little bit showing you something is that with the negativity of the news, it hasn't been able to break too much lower. So if anything, that, you know, that's kind of showing you a little bit of something in terms of how the equity markets are kind of holding up with that. But in terms of new trades inside of this range, I don't believe it's not as high quality as we did have during last week. Last week, you know, Thursday came into the couple of first areas. Friday also came into some, and then today we don't have that same scenario that we did, as I think mainly because we have quite a bit of data coming out, you know, next during this week. So that usually has a lot to do with it. Let's go into the bonds. So let me start with so what's the importance of looking at the bonds, right? As bonds move up, interest rates come down, correct? So what we're seeing right now is where we are in terms of how high we've come back with it. A lot of times the bonds are going to be an inverse market to your equity markets. However, what I've seen since all this quantitative easing started was they've kind of been on a track of their own. Doesn't matter if the market's moving up or down, they're just kind of moseying all the way back up on their own. So right now we've come back to the same supply level that we've been at numerous times, as you can see up here. So this is where we've moved up to, right? And so we've come back here. This is almost a fourth time back in. What we have currently right below current price is, you do have this, so you can see right below current price, it's a mixture of, yeah, right? So with this one, you can see some demand that's formed fairly close to this retested zone. But of course now we've become higher up in price. And then our lower areas on the 60 we haven't retraced to. Remember, this whole move came really from our demand area down below. Right? This was our demand area down below. We've continued to rally from that and then have not been able to get back there. So yes, the bonds will still remain strong overall in general, even if we do pull back from these highs, as we still have some demand below current price with this. And the move, you know, you can see really just started from the 19th and now just, you know, basically 10 days later, and that's where we're at. 30 here. With the 30-year, what we see with the 30-year is, okay, it's not on here. So we still have up a little bit higher. It might be on the 4-hour. Let me just check. Yeah. So what we see here with the 30-year is we have the 4-hour that's still a little bit higher. That's coming in at 184.26, 186.17. And the same levels down below on the 60 minute, I believe it was. Well, now I moved this, yeah, or the 30 minute. Oh, it's not on here. Actually, it doesn't have the same levels, as you can see. It's not quite crisp and clear. If I were to take a buy back down, I would do it in the 10-year than I would in the 30-year. They're not as clean. You can see right inside of here, it's a lot of it's overnights, right? You can, and sometimes you don't even need to, like, I mean, I'm hovering my mouse over here, but I didn't really even need to do that. I could just tell by the way the candles look that, you know, that this is really a, you know, not an ideal area, as you can see. Okay. All right. So the question about the set and forget. So for the most part, and I'll be honest with you, in the very beginning, nothing was set and forget. Absolutely zero was set and forget. And that's purely for my, I mean, I would rather be up 18 out of the 24 hours than to do a set and forget. That's how bad it was. And that had partly to do because I didn't know my core strategy well enough yet, or, you know, my original supply and demand well enough yet. And the other part was just because, I didn't sit there to figure out risk to the exact. You know, I didn't sit there and say, well, this is exactly what I'm risking on this trade, this and that. I was just trying to make money and didn't really worry about anything else. So because of that, it caused me to do a lot of get involved with emotional trading, right? You don't think you're going to. You think you're going to be cool as a cucumber throughout the whole thing, no matter what happens. But you can see if you're, you know, if you're doing well and you're on a high, you think you can do no wrong, right? And then usually when you do no wrong, that's when you get your biggest loss. And then you're on the other end of it is, well, you think you're going to, kill it that day. And then all of a sudden you start out with 2 losses and you're like thinking, well, now what? And obviously if you got 2 losses going, don't get me wrong. You can have 2 losses going in the New York session. Doesn't mean you're going to be the same way in the European session or the Asia session. So the one thing I had going for me was that since I was trading 3 different sessions, Asia, Europe, and US. If I wasn't correct in Asia, I could be correct in Europe. If I was correct in Europe, doesn't mean I'm going to be correct in US. But what's bad is if you are just, say for instance, you're just trading the US session, right? I'm just trading the US session, then all of a sudden I get 2 losses, and so clearly I'm not reading the market right that day, right? I'm completely wrong in my direction, and I'm just not reading the market right. So instead of saying, okay, listen, I need to take a step back because I'm not reading the market right, I go in and go, oh, let me try and make this back right now. Let me keep doing it. You want to stop me out on my short and it's a big bullish day? Well, that's okay because I'm going to get this money back right now. And then, so meanwhile, you keep trying to do the same thing in the same session and you're just getting creamed. And that doesn't even make any sense, right? So you want to try to eliminate that part of your trading as much as possible. Now, does that mean I never take anything because I see it, I didn't see that this level was there, and then all of a sudden I see it coming into there and I didn't have it set up yet, that I don't just enter a market order and then put the parameters around it afterwards? No, that doesn't. That for sure still happens. You're not going to be 100% seeing everything all the time. So yeah, there are going to be times where you're going to be like, oh, wait a second, that's the level. I want that level, but I didn't place in my order yet, but it's there. So let me put it in right now. That for sure does still happen, and that will always happen. But what the difference is, I'm not just going to, okay, put the market order in and then just say, let me just leave it, and because I didn't figure it out, I'm just going to leave it. No, I put the market order in and then I attach the order to it afterwards, or I try to figure it out very quickly and then I can adjust it after the parameters are set in. All right. Yeah. Just, you learn from you learn from your lessons. These days they have much more things that, many more bells and whistles that you can, try to eliminate, any of these emotional type of trading, but you're still the one pulling the trigger. So you have to be aware of these things. Okay. I didn't realize I've been going a little bit off a little bit. Okay. Let me move into the dollar. Sorry about that. Sometimes I think what's important for new people is trying to, hear what people have been through, and this way, maybe we should do a quick little, before we move into the dollar. Let's do a quick little rundown of the crude. All right, so you can see with crude. Okay, so we can be on a watch here. We've come very close to the overnight low. In terms of where it is, to me, it's in between 2 gaps. So it went below the first gap we were rallying off of for a little while, and now the second gap we haven't quite come into, which is going to be down in the 19s. I don't have the price exactly today. You do have to go back quite some time. If you go back on the 240-minute chart, you will see that you will have another gap down inside, down in the $19 mark. What we do have up above, now just take it for what it is. We've had a very strong move down, and we have some continued 5-minute areas. You can see you have a few on top of each other right on top. So since it is quite a few and we have traveled quite a bit down, you don't need to do set forget. You can watch this whole general area. You can see this whole area. Mainly it's considered overnight. to me, this is kind of the time where people start coming into the market. So even though it is above the pit session trading time, it's still, it typically, it should be circles, but I would consider this a little bit more of a between a circle and a square, if that makes any sense. So these areas on top of each other. So even though they're circles, they should be a little bit circle to the square type of thing, if they have like a circle square look. All right, so that's on CL. GC, so if we take a look at this bigger, this pit session, so this is the day session trading of GC. What we have seen with GC is that we've come down off of this higher time frame zone. So remember, with gold, it's not just to deal with whether it's the stock market or it's the dollar. There's other issues that goes along with gold supply. The actual usage of these markets. If China gets a little bit better, gold can get a little bit better. But also just in general with if the stock market can, for some reason has a big sharp drop down again, then people have to, get cash, and then they can, sell off gold, and so there's many factors that kind of involve with gold. So you can see right now that we are sitting right in between at the current moment. Our levels up and down are still further away. You have a gap that's a little bit closer to the 1560s, and then up above, this gap has really been coming off of two supply levels. So I wouldn't consider the upper gap as significant, just because we've already come up off of two upper supply levels. I believe we also had a lower overnight demand level, or is this overnight? On the 15-minute, no, it's not overnight. And you can see that area is still there at the 1551. So this is going to be mainly coming inside of that gap down below. Okay. Okay, I want to try to move through these a little bit quicker because I didn't realize our time was, but I thought it was important to, oops. Okay, I'm on the wrong chart. Here we go. All right, here we go. So with the dollar, you can see how we've come down. And remember, too, we had discussed why we did not like this as a zone of demand. I said it was a zone that you can watch. I didn't like how prices came down first before it started to move back up again. So if the level was that strong, prices would not have moved down. So some of you were trying to take some shorts in the currencies, which was fine. But what the issue with that was because the dollar was not at demand yet. So that caused for very small profits on the short side. However, now you can see that we have moved down into our level of demand, and now we started to rally back up again. So now I believe you can try to take some shorts if you're not already in some shorts in some of these markets. Now with the news, the news coming out during the week is going to affect it, and we will get into this during the week as we go on. But for right now, let's go take a look at what's close by in the dollar. What I see at the moment is a 60-minute, two levels on top of each other. That could very well change because remember too, the dollar is in a higher time frame, middle of the zone inside of the weekly and the monthly. So in terms of direction inside of these markets, it has not gone too far inside of these markets, right? So meaning it's ranging inside of a weekly and monthly, right? So with this area is what I would look at is are we going to form some new demand coming back into there? That could also cause a because it's not particularly a trending market at the current moment. That's my a little bit of a take on it for the moment until we get to some more news during the week. With that being said, let's go and take a look at the euro. Now, with the euro, so remember this too. for those of you that's looking at spot. So if you take a look at these two charts here, the only difference is you can see is going to be your prices, right? Your prices are going to be different, but the way that the markets move, and it's going to be very, right? It's going to be the same here. You take a look at that, and you take a look at that. So if you can find the same time frame and the levels that we're looking at on the same time frame, all you need to do is find your numbers. But other than that, the levels, if you go to the same time frame, are going to be the same. So that goes for the Euro USD, the Aussie dollar, and the pound dollar. And of course, we can switch it back and forth during the week. This way, you know, both the spot market and the futures market gets their all right, so you can see right now we have started to fall a little bit further. What I was looking at this morning, which we've already kind of fallen from, you can see on the 5-minute, right? So you would just do this on the Euro USD 5-minute chart, and you would go and take a look at it. So this is coming in at 11161 to 11169. I wouldn't discount, you know, what's kind of forming through here. So what I would do is, I mean, if you want to, you know, if it's small risk and you want to try it, but you can see this is still being formed because we didn't take out demand yet. Right, so I would keep a watch on this because you can see we didn't quite take out demand yet, but that you can see is a blue circle. And then of course, down below current price, we have our 240 that will come in line with that 60-minute supply zone on the dollar at the 1.096 to the 1.0920. The other market I want to go through is, let's take a look at CD. So CD is going to be a little bit different than, well, it's going to be exactly the opposite. So if we take a look at CD here, so its weakness is coming in because dollar strength and oil weakness. But if you take a look, so let's go through this area first. We have it coming off of the 4-hour. It has 4-hour demand down below at 69.73, 69.35. Again, you're going to have the same thing here. You're going to watch out for, if it continues to break demand, that we may also be forming a supply. Right, so we're going to watch out for that if we break further demand. On the smaller time frame, I do have, so you can see here, this one barely tested. This is at 71.63, 71.71. And this one's at, you know, this one location-wise is not that great, but I was looking at continued weakness to try to bring this back down. And this is at 71.34 to 71.40. Now, realize this on the spot market, CD is going to be the opposite, right? Because now you're going to have the dollar, that's your first, right? This is going to be your first currency. So if this is going to look opposite of the Canadian dollar on the futures. So if we were looking at, say for instance, go to the 5-minute, right? Now all of a sudden you're looking at, instead of the supply side, now you're looking over at the demand side, right? So, and I was looking inside this overall area on the demand side and down below, right? So that's how you're going to have to do it when you're doing on the spot. But like I said, we can switch back and forth during the week so that we can cover, you know, both. And then the other one I want to go through is JY. Okay, JY. JY, you can see. So we do have this closer area of demand that's coming in 92.60, 92.04. I do believe for this upper one to hold, so you do have these two on top of each other, the stock market needs to kind of hold inside of the range that it's in on the supply side. So meaning the stock market can't rally above this, above these previous highs. Otherwise, this JY is not going to hold as well. So you can see right above 2, we have a retested supply zone at 94.12 to 94.72. And then a fresher supply zone at 97.58, 98.16. Now with this one, again, it's going to be just like the dollar CAD. This is the dollar yen that's going to look opposite to it. So the futures, you can see this is just the opposite. This is on the dollar yen side. Okay. And then just real quickly on AD, we do have some 15-minute demand. You have a couple on top of each other here if we do pull back. Now, Forex market, you really don't have overnight levels. The only thing I would say, and this is why, so I'm going to end with this where, okay, so the Forex market, you do not have overnight because they pretty much trade throughout the night. What the importance of this setup here is, if you see that this is coming into the Aussie dollar, right? If you see all of this is coming in as such, what you'll notice is this is during the Asia session. So if we have an Asia session zone, that's going to apply to Aussie dollar and yen because that's mainly when they trade. If you have the pound that's coming in during the Asia session, now all of a sudden that's going to be a little bit of an off time for the pound, right? Same thing with the euro. If the euro is coming in during one of these sessions, that means it's a little bit of an off time for the euro. The Canadian dollar, if it comes in at the levels during the, when the yen is trading or when the euro is trading, that's going to be a little off time for the Canadian dollar. So just keep that in mind because the Forex market really does not have typical overnights. All right. Anyway, as we go on through the week, I know I went through this a little bit quickly, but we can definitely dive into it a little bit more deeply. And yeah, so that we'll continue to do so throughout the week.